Welcome. I'm Tony Cordato, property lawyer. Today I have the privilege of having a chat with Luke Moroney. Welcome, Luke.
Thanks, Tony. Thanks for having me.
Luke is a property buyer. Luke loves looking at properties. Luke likes finding little gems of properties for people who need some help in buying properties or want some help in buying properties. So tell us about yourself, Luke.
Yeah, well, I've been investing myself personally for 16 years now, so a lot of experience there. Built up my property portfolio, and now it's all about helping other people. So we help people as buyers agents, typically focus within the investor market, and we look for affordable properties that people can look at cash flow or growth, so they can build their wealth.
So a buyer's agent just looks after a buyer.
Correct.
A real estate agent looks after the seller, who of course pays the real estate agent a commission for the sale. They're two different things out there. So if you're looking at a property, a buyer's agent can be a good investment.
Definitely, and that's what we find. You know, there's a lot of value in what we do and what we can create for clients.
And so, Luke, you specialise in investment properties and investment properties that in a certain price range.
Yeah, typically that price range. Most of our clients are buying probably between $250,000 to $450,000 houses, and our typical focus is in the 15 to 35 kilometre range outside of Brisbane.
So at the moment, Brisbane offers houses between $250,000 and $450,000.
And that might not be the case in 3 or 5 years' time.
Well, actually, you're hoping it's not the case because you're hoping those values will increase.
Exactly, and that's why we're buying there right now.
Yeah. Well, it's one reason. The other reason is that you're really keen on the rental returns you're getting from those kinds of investments.
Yeah, I guess a lot of people from Sydney might be watching this, and you know, your return, or what we call as yield, gross yield on a property, might be between 2 or 3% in Sydney. We're finding that in Brisbane, that in the outer suburbs of Brisbane, we can get somewhere between 5 and 8.5% of gross yield on the property.
Yeah, so let's just work that one through. Like, if you put your money in a term deposit, you get 2% interest. If you put your money in your standard Sydney house, you might get 3%. It's not interest, it's rent, of course. But in the areas you're looking at in Brisbane, you put your money in and you might get 5% as a rent or interest equivalent, and 8%.
Yeah, that's right. So that's really good numbers to work on, Tony. So 2% interest on a term deposit. If you're looking at interest you pay on your loan, you're somewhere around about the 4 and 4.5%.
That's right.
And then if you're looking at a yield that you have that is 7 or 8%, then a lot of that the interest is going to be paid, and a lot of those expenses, if not all of those expenses, are going to cover the mortgage and everything. So you're cash flow positive on the deal.
Yeah, so your return, in simple terms, your return on property has to cover the interest you're paying on the mortgage. Otherwise, you're in what's called negative gearing territory.
Exactly.
Now, you can do negative gearing at the moment, of course, and it can make sense for a short term, but the winds of change are blowing against negative gearing at the moment.
Yes.
Not only politically, but also just economically. Why would you want to go to work and subsidise somebody renting your property?
Yeah, you'd have to be almost guaranteed that you're going to get massive amounts of growth, but there's no guarantees when you're investing.
That's right. So that's, you're positive in return and you're positive in growth. That's your two positives. Now, when you're looking at a property, what do you prefer? What style of property? Do you prefer houses, townhouses, home units?
Well, each particular client, when it comes to their investing and their strategy and their mindset, we really need to dig a little deep and find out what they're all about, who they are. So you've got to say, is the person a little bit time poor? Well, are they going to be able to do a renovation or have an older property that requires, ongoing maintenance on it? So you really have to set the strategy for that particular person, because that type of investor, you might buy something that's a little bit newer, so they don't have the ongoing maintenance, the ongoing calls and emails. So that's a typical person, that, you know, one type of investor. Then there's another type of investor that might want to be, this is the future for them, and they want to get involved in property investing, and they want to make this a path of their life, as opposed to someone who sort of sits and forgets. So they might want to get involved in a little bit of renovations and a little bit of repairs, or being involved in a granny flat development. So, and then maybe further on, do a development themselves. So it will be a little bit horses for courses in terms of clients that we're looking at. But typically we'll look at a high cash flow play, which would be a townhouse type of townhouse. Might be 2-bedroom. You're probably looking in the market somewhere between 160 and 180,000 right now. And you're probably looking at a rental return somewhere between 260 and 280 a week. So very good cash flow. Most of our clients are probably looking for that idea of putting a potential to put a granny flat or subdivider property or a renovation. So your property prices are somewhere between the 250 and 450 price range, depending on the areas that we're working on. And then the potential to do those developments on those properties can, you know, outweigh, you know, some of the risks that are involved in it, and obviously the potential growth is built in there as well.
Yeah, so in summary, you're either a passive investor, just want to put your money in and set and forget, or you're a more activist investor, because there's a bit more money in being an activist investor.
That's right. And there's you know, that's the basic, and I agree with the basic summary of that, but there's a few nuances in there involved in individual circumstances, individual likes and dislikes. So we all take them into account as well.
Oh, and just going back, why do you love that price range, like below 450,000?
Look, I think, you know, in this day and age, in this type of market where finance is tight, this is especially important, because you know, there's a lot of affordability issues in Sydney and Melbourne markets. People are starting to look to interstate for the movements, so immigration into in places like Brisbane. We're seeing that the wages are not that much lower than what you get in Sydney as opposed to Brisbane, and there's circumstances where it's actually quite affordable for people to live, or half the price to buy or to rent in those comparable suburbs when you look at apples for apples.
That's at the moment. Things change, and you keep an eye on the market, and when things change, you adjust.
That's right. And there's a whole list of other things. There's job growth going on there. There's a lot of infrastructure projects being put on. And, you know, I think it just comes down to price. What can people really afford in Australia? You know, I remember seeing a statistic a few years back was 47% of people in Australia live from paycheck to paycheck. Yeah. And that's significant. And when you talk about affordability and prices in Sydney going up 70%, who can start to afford to live in Sydney?
And of course, there's a cap on rentals. I mean, a family can afford maybe $600 a week, and so you have to buy properties which are affordable by a big proportion of the population.
That's right.
That's a very important thing. And you don't stray too far out of major metropolitan areas, do you?
I think that's where, you know, the risk comes in. You know, in terms of what's a regional centre going to do. Yes, obviously there's been growth in many regional centres over the years. Are you going to have a higher risk of tenant vacancies in some of those areas? So I think, you know, for the average investor, we want to look at, firstly, what's the risk level for them? So getting into investments that provide lower risk, firstly, and then secondly, the potential for growth. So, you know, going through people's lives, they don't want the extra headaches and things like that of properties, you know, halving in price overnight, like we've seen recently with some of the off-the-plan units in areas of Sydney. So, you know, just because of the way things were built, or, you know, and then it's dangerous for investors.
There's too many of them.
That's right. And that's what you know, that's an area of the market. It's not as opposed to regional, but when we're looking at where's the lowest risk for people to invest right now.
And of course, you charge a fee, but you just charge a flat fee, don't you?
We do. We charge a flat fee of $8,800 for the purchases of properties through our buyers agency. And yeah, that's on per deal that we work on.
Yeah. And You register, pay the money, and there's a selection of properties presented.
That's right. So we do an initial engagement fee for people to have money put down so that we know that they're
Genuine. Yeah.
They're genuine and they want to move forward with a property purchase. And so there's an idea. Then we present them with properties, talk to them about a strategy that they want to adopt, and then once they select one of those particular properties, then we go forward and negotiate on the property, whether that's terms or price, and work on a deal that will suit them.
Well, and for sure, you'll do better in terms of your negotiating price reduction, or either price reduction or terms. You'll do much better than what you charge.
Yeah, look, absolutely. And we're going in, we're finding off-market deals that don't even hit realestate.com.au or domain.com.au. Sure. And, agents are presenting us with deals that, and sometimes the terms exceed the drop in price value. So you've got to look at what's going to work for that particular buyer who's coming through. But yeah, we're getting significant discounts on properties.
Yeah, because of your relationship with the real estate agents, and they know that if you agree to a price, they've got a sale.
That's right.
As opposed to someone off the street that they're never quite sure.
That's right. And it is about, if you look at any types of businesses out there, it's about developing those relationships. Yeah. And that's what works for us, and that's why we can get really good deals for clients.
Great. Okay. Well, it's been great chatting with you, Luke.
It's been fantastic,
Thanks for the information. And that's it for now. If you want more information, go onto my website, www.propertyinvestmentlawyer.com.au, or email me through the website and I can give you Luke's details.
Fantastic.
Thank you and goodbye.
Thank you.